Hey, hi everyone. Today I'm extremely honored to have Alvin from Dr. Wealth. So for those of you who don't know, maybe I'll get Alvin to explain a little bit more about what he do. Yeah.
Hi, I'm Alvin, a CEO of Dr. Wealth, and we are a financial education company. So we train a lot of retail investors who want to learn about investing in a more structured way. So we have a lot of courses, and we also do a lot of free content like videos, like written articles. You can always check it out. Not necessary you have to sign up for our courses, right? We also give a lot of free education to the public.
Yeah, so I'll definitely leave a link to his blog and to his YouTube channel as well. So do check it out if you're interested. So maybe just to pick your brain a little, right? Because you've been coaching and have been talking to a lot of retail investors,
Yep.
right? I believe 2022 we started off on not really a very good note. Maybe you want to talk a little bit about the volatility and what you look towards in 2022?
My personal view, right, as with a lot of views, it can be wrong. But my view for 2022 is that the interest rate hikes are almost a sure thing. The Federal Reserve have already announced that. And we all know that the loose monetary policy has been going on for the last, 13 years, since 2008. After the financial crisis in 2008, they've been printing money, and just that the inflation has not gone up over the years, and the Fed didn't see a need to increase the interest rate until now. I think we have COVID to thank. The supply chain was disrupted, and the prices of commodities have shot through the roof in 2020. Freight rates have went up 10 times in 2021, and I do think that these signs will continue. And now the Federal Reserve focus is more like to increase rates to combat inflation. So with that, we see a very massive shift of valuation in the US. We saw that high growth tech stocks were like not doing anything wrong for the last few years. You just buy and just hold, and you can have double, triple your capital over just a short span of like 1 year or 2 years, right? But I do think that the period of easy money is over. And that means that we're going to see a change, a sector rotation, where traditional sectors now are probably going to come up. Your oil and gas industry, your commodities link, your materials, or even finance sector, which benefits on high interest rate, would benefit in 2022. So tech stocks, I think, especially the high growth ones, will suffer more. I think recently there was a report where 4 out of 10 Nasdaq listed stocks were down more than 50% from the highs, right? So I think this will carry on for the remainder of 2022 as long as the interest rate hikes are going up and we have no other exogenous factors such as a new variant of a virus coming in. So that said, that if some of you who are more interested in short or mid-term kind of play, then shifting to some of the traditional sectors may make sense. But if you are someone who is like a long-term investor, then all these macro factors doesn't matter, right? Because you're more bottom up, you focus on good companies, you buy them and hold for a long term, then these are just noises, right? So I think that this 2022 will be a bit different from what I've experienced in the past few years. And there will be resilient sectors, right? But there will also be sectors that will not do well and sectors that will do better in 2022. So it is going to be a bit tricky in that sense.
So personally, after understanding this entire outlook, right, because this is your own view, right, have you been doing any rotations or any adjustments to your own portfolio?
Personally, I'm more of a long-term investor. So even though I am interested in this kind of macro changes, I don't make big changes to my portfolio because predominantly I buy things that are value for money and there is a good long-term prospect of it, right? So for me, majority of my investment are in China, about 70% in China, and I believe that 2022, because of the sector rotation, it is a good year for value more than growth, because growth value is in the future, right? And if interest rate goes up, your present day value of the future value is a lot lower. So there's a lot of valuation reset for the high growth stocks, while stocks like big tech, where they are already earning profits today, they are less going to be impacted by this kind of interest rate increment, and that makes them more resilient, right? A lot of your mama stocks, we use their services almost every day. To me, it's more like a consumer staple than a tech stocks already.
Yeah.
So in that sense, they're going to be resilient. They're still going to make the money in 2022. Just that they may not may not prosper as much as in the prior years, right?
Okay.
Where big tech actually has done quite well in the last 5 years, I would say.
Yeah. So maybe to discuss a little, right? So you actually alluded to the fact that you're 70% in China.
Yes.
So also your own discussion just now privately, we did talk a little bit about your own entire idea on how the Chinese economy has been governing themselves and some of the philosophies in China as well. Maybe you want to share with everyone what are your macro outlook and how you see China as an economy and how they govern themselves in the regulatory space.
So definitely, with 70% into China, right, I am biased towards China more than the US, although I have some US exposure as well. My view is that relative to the US, China stocks have been a lot more cheaper in terms of valuation, right? And we talk about the valuation reset that's going to happen in 2022. I think it is time for China to shine from this year onwards. I don't know exactly when, right? But I believe that if interest rate going to go up, it's going to help China, which is the factory of the world. A lot of commodities, a lot of production comes from China itself. And I'm talking about A shares in general, right? Not just the H shares. A shares have a lot of consumer staples, which are also resilient to interest rate increment. So I do think that there could be a better year for China in 2022 than US, right? But again, this is my view, right? I can be wrong. But my bet is on China, and it has been on China since, especially when the regulation started last year. I used to be slightly below 50% for China, but after the regulation started, I just keep adding China for the past 2021, right? So my view about China is that you cannot approach China as with any other company in the US, right? We are very familiar with the US companies because a lot of investment literature were based in the Western form of capitalism. China is not the inventor of capitalism. They have their own history, right? The dynasties in the past. They have their own culture, and then the communists took over in about mid 1900s, right? And thereafter, in 1970s, they introduced the market economy together with the socialism that is prevalent in China even today, right? So it is a totally different system that we talk about, and I don't think that you can just blindly apply whatever Warren Buffett say into China, or Peter Lynch, or any other American investor, legendary investors' philosophy into China. It is a different space, and there are 3 C's that I do think that makes China different. So one of it is central planning. China, it is not a democracy like the US, where their political powers are separated into legislative, executive, and judicial. Okay, so it is that even the president has no power to change rules or the law single-handedly. He needs to go to Congress, table it, and get enough people to approve it so that you can pass to law. But in China, it's different, right? If the top guy say that, no, I want this change, I don't like this behavior, right? You will be sure that it will be changed. Okay, so investors are not used to this different political climate in China, but this is characteristics of it, right? If you want to invest in China, you have to play by the rules of the land. You cannot just assume that you're bigger than the law or the authority that's there. You want to just invest the way you want, as if you were doing it in the US. So I do think that China takes a little bit of a finesse in that area. So I understand the politics are different in China. And then the second C is related to communism, right, which is different from capitalism in the West. So communism cares about the man on the street, right? And a lot of all this regulatory clampdown is to help bridge the rich-poor gap as much as possible, which is different from the US, right? It depends on whether is it Republican or Democrats in power. If it's Republican, it'll be worse, right? Because they're a lot more right-wing. Democrats, at least you still have some chance that they want to level that playing field as much as possible. But again, because their powers are separated into their 3 bodies, it's a lot harder for them to execute certain policies. But in China, it's different, right? If they find that the guy on the street is being mistreated, like for example, Evergrande was selling that wealth management products legally or illegally to a lot of people, and they all now are asking their money back, right? The authorities have stepped in, okay, to really pressure Evergrande to pay them back. So with that idea is that they will always want the men on the street or the masses not to be mistreated by the rich, right? So you see a lot of the basis of all this regulatory standpoint comes from that, right? Which is the belief of what socialism or communism is all about. Okay, and then the third C is Confucianism. The value system in China is different from the West. I'll give you a few examples, right? So in US, it's about liberty, it's about freedom. You are supposed to say what you think, and the others will respect you because you have the right to voice your opinion. Even if I don't like it, you have that space, right? And then we can agree to disagree. Okay, but in China is a different story, right? And even as a Chinese myself, we are brought in the environment that if you know someone don't like to hear what you're going to say, you better don't say it, or out of due respect, right? Especially if it's a senior. Okay, you never say things that they don't like to hear. So with that, just one simple example, in China, there are certain behavior just not acceptable. Okay, and you can see that they still want to uphold this value system in China, and they have clamped down even on celebrities that were either having extramarital affairs. For example, Wang Yihong, right? They also have something to say, but in US they wouldn't give a shit, right? It's like, okay, you can have as many partners as you want, but in China it's just not acceptable because it's against their value system. So with that, you have to also the Confucianism itself, understanding it will give you a glimpse to why China is doing certain things. Okay, because they do want their society to behave in a certain way. Right? Of course, if you use a Western value to look at how China does it, it's unacceptable, right? You're infringing on people's liberty and freedom. Right? Why are you doing this? It's a clash of value, and I do think that the bedrock of the hostility between US and China is due to value system differences. And if China is not a threat, US will not be so uptight about it, right? So in the last few years, especially when Trump went on to become the president of US, you can see that the hostility towards China has increased a lot, and I do think that that is the sign of the rise of China, right? If you are not a threat, why worry about it? Precisely, you're worrying about it because it is a threat, and I do think that this is going to go on, and throughout history, since the Portuguese started to have colonies around the world, no non-white superpowers have dominated the world. Okay? And it is the first time that a yellow skin race have challenged that throne and bringing in a different value system that is something that is just hard for a lot of people to swallow. Right? So I do think that it is not going to be easy next 10-20 years. The hostility is going to be there. US will try their best to stay on the throne as much as possible, but my view is that China still have that potential to be the superpower, but it also have to learn how to behave in a world stage, right? So as much as we are new to China, China is also very new to the world, the rest of the world. So it takes a lot of learning for the next 10-20 years, but my bet is on China.
Okay, maybe Alvin, thanks for the entire overview of China, particularly from your point of view. Maybe I'll just pick your brain a little when we go through the 3 Cs. So first you talk about central planning, right?
Yeah.
So what makes you so sure that the government is better without all the different regulatory separation of powers, rule of law? And what if a lot of people like to speculate, what if C wakes up at the wrong side of the bed and he decides to, for example, kill off big tech? So maybe as of now, we look at them, it's more of like a clamp down. It's not really killing off. The killing off really came into the education companies like TAL, Oriental, and even astute investor or investment arm like of Temasek Holdings, they also invested into all these different education companies. So what makes you think that you're so confident that all these different investments that you have in China wouldn't be the next one in line?
I wouldn't say that I'm very confident and very sure about that, right? But I do think that if you keep in mind of the 3 Cs, that how they operate, you can minimize the impact on it. So for example, if let's say the company complies with a lot of or espouse the Confucian values, it is less likely to be touched, right? If it cares about the man on the street, it's less likely to be touched. So as long as the company behave in a certain way, I don't think the government is going to pick it as a big target or the first target. So there will probably be a lot more targets that were misbehaving. So I'm not saying with absolute terms, I'm just saying with probability, right? It's about reducing it and understanding why China is doing certain clampdowns and on particular industry. Like for example, education was because the competition was just so bad for the children, and parents are so afraid to have children. And that is really against their policy. They want to encourage more birth, happier children, happier parents, so that they can bring up the birth rate. So I do think that if you understand from that point of view, you should be able to minimize. So I do think that some of the consumer staples or consumer discretionary products is along that lines, right? So I always like this Foshan Haitian, which is a soy sauce kind of company. It is a staple, and the family are used to buying that kind of brand, and it's very sticky in that sense. And children also like, think of, my parents always use this, I'll buy this in my new family. So I think that for something like soy sauce, as long as you don't be fraudulent, put nonsense inside and kill people, like what they did for the dairy, the melamine for many years ago. But even that, Ili and Meng Yu has came out of it and became stronger, right? So I do think that from that aspect, if we see that there is not much harm done to the man on the street, the chances of regulation is lower. I wouldn't say it's zero, but I'd say it's lower.
Okay, I actually just wanted to jump in and really talk about this TAL thing or the education thing. There's a lot of fake news out there, like especially from the Western counterpart, saying that they're out there to teach you freedom of speech, to teach you how the US is a far superior country or whatnot. I get slightly triggered from this kind of narrative because especially in Singapore particularly, a lot of us we have a huge tuition industry compared to the normal the country size, the GDP to tuition, right? And nobody teaches me about what Western values and stuff. All they do is they make you become exam smart. They make you do TYS. They make sure that you are harnessed and you have that competitive advantage when you go for Gaokao or when you go for your A levels, your O levels. That's what they teach. And this entire narrative and this pressure out there in China, it's crazy. And when you look at all the documentaries, right, students can start from 8 a.m. and then study until 1 a.m. Is that not crazy enough? This is not investment banking. They're just 12-year-old kids trying to get through with life. So that's just the education part. But
it's an arms race.
Yeah, it really becomes an extremely toxic environment, and more importantly, it perpetuates something that the government would not wish to achieve in the long run. So maybe go on to the communism, right? You talk about this interesting idea about a man on the street.
Yep.
So because we are investors, as retail investors, we are shareholders by extension.
Yeah.
So we are we buy into a company, we buy into the company's vision, his cash flow, whatever they've been doing. What if the man on the street is they don't own part of the equity? So what they do is maybe they push out products, they push out services for the people, and they try to create value. That's why they get brand loyalty, they get market share and stuff like that. What if these two ideals clashes? So even though the company might be doing well, what makes you so sure that the investors or the shareholders actually also participate in this entire value creation?
I agree with you. It will definitely clash, right? To say that otherwise is totally lying. Okay, it will clash because of as much as possible you want to a company want to increase the prices and increase the profit margin, but in doing so it will hurt the consumers. And a classic example was in the pharmaceutical industry, which the government has regulated as well in the past few years. They found that there were a lot of middlemen between the drug manufacturer and the hospital endpoint where the patient pays for it. So there were like 5, 6 or even 10 middlemen. They were just doing nothing but just to pass the drug to the next party, and they just keep all jacking up because they all need to make their profit margin for themselves. And that increases the drug cost a lot. And to the point that the government said enough is enough. We limit to 2 invoice policy. That means the manufacturer, 1 distributor, and hospital. And they just overnight killed thousands of companies ruthlessly. So I do think that is a good sign, right? Because rising drug cost is not sustainable. Right. So one way to look at it, how can shareholders benefit from such policies, is that you want a sustainable long-term growth. You don't want like, this year I spike up 50%, then next year, because nobody buy, then I drop to minus 5%. Right? It is very disruptive to the business as well. As a shareholder, you want to see the kind of steady long-term growth, especially if you want to hold it for over a few years, right? You don't want that heart attack one year suddenly we become unsustainable, people stop buying, and then your revenue just collapse or profits just collapse. So I do think that from that perspective, you want to play it fair, but yet extract enough economic value out of it. So there's two kind of value, right? One is the value they provide to consumers. One is the economic value that's captured by the company in exchange for the value that was created. So I do think that the economic value that you extract from the consumer should be less than the value you create. So if that is the case, then this is what I term as sustainable growth. And I do think that the government is looking at this, right, to make sure that the man on the street is not so much worse off, that the profit margin is so just obscene.
Okay.
And you capture more economic value than the actual value provided to consumers. I don't think that's sustainable.
Okay, actually, I had a very interesting theory that I was sharing with my friend previously. The easiest way for the man of the street to also participate in shareholders' creation is, I'm not too sure whether you know Haidilao. They actually offer a lot of their, even all the way down to their service crew, share-based compensation. So whenever let's say you're operating in any kind of company, even if tech company, food industry, or whatever industry, what if they give out shares to all the laymen and everyone gets to participate in the growth of the company? What do you think of this kind of idea?
I do think that this is a good idea, but on the other hand, realistically speaking, I do think that not every employee will appreciate it, right? Especially those who are more cash strapped or short-term focused. Like, hey, don't give me this shares, I cannot do anything about it. And you still give me a lockup period.
Yeah.
I just want to get the cash now. I'm going to pay for something or spend on something. So realistically speaking, I don't think that it will benefit everybody, right? But it will definitely benefit more than if they have not done it.
Okay,
So
understand.
I do think that it is a good sign that the companies are willing to do that. But of course, it's also dependent on what is the price that they issue these shares, right? The shareholders are indirectly paying for it as well.
Okay.
So it is a balance. Sometimes it might be cheaper to pay cash, especially if the valuation is over a certain value, right, of the company. Then paying cash is cheaper than issuing shares. So I do think that the valuation plays in consideration as well.
I think most of you guys that actually watch the channel are only interested in like ADR shares. So people that are invested in
The tech stocks.
Yeah, the tech stocks. So you have your Alibaba, your Baidu, your Tencent, even though it's over the counter. You have your Huya, your Bilibili and stuff like that. So if maybe just to pick your brain a little, do you have any expectations for them in 2022, specifically the ADRs?
I think because of back to that theme of rising interest rates and inflation, I think that those stocks that are loss making will not do well in 2022. Right? Because again, their value is in the future, and you discount to today's value is going to be much lower due to high interest rate. We're talking about a massive rebasing here, right? Because now we're talking about what, 0.25% interest rate, and pre-2008 we are looking at 3 to 5%. That is a lot of room to catch up, which means the whole valuation will be turned upside down. And I do think that like Huya, Bilibili, where they're loss making, is not going to look good for them. But whereas for the companies that are being profitable, like your Alibaba and Tencent, they will be less impacted. And they have a strong user base in China. It's not so easy, even after you remove the wall garden, the users will just go all over the place. No, actually, for even Tencent as example, the mini programs that they launched have seen a 20% uptick from a year ago in terms of usage. So I think that the profitable ones are the ones that people should focus on given this rate change environment, right? Because I think some people, they just don't want to look at the macro. They think that, okay, I just do from the bottom up. It's actually fine if you have a lot of patience and you have a lot of conviction. But if let's say you want to play smarter, especially in the short term, you don't want to have so much pain, then I do think that focusing on the more profitable ones will be a good start. Right, you'll be a safer bet compared to the loss-making ones. The good times are over.
Okay, just a quick fire round. Do you think we have bottomed from here?
You mean for China?
Yeah, for Alibaba specifically.
For Alibaba, I wish to think so.
Okay.
I wish to think so. I thought that around 150 it has bottomed, but it went to 120, 110.
Yes.
But recently it has rebounded quite strongly. But if you use some basic technical analysis, they have not broken the downtrend yet. So it is still anyone's guesses that it can go down, and I'm prepared that it goes below 100.
Okay.
So I can't tell whether it's bottom or not.
Okay, so maybe just to end off this entire thing, right? Do you have any like warnings or any advice for people out there to when they want to invest, especially people that have been both holding Alibaba for quite a long time? I think a lot of you are, or maybe people that just started out and maybe are they interested when they're interested in buying Alibaba?
Okay, two groups of people, right? So for those with Alibaba, of course, it depends on where you buy, right? Definitely, my view is that the valuation has come down. And financials or Ant Group, because of the new regulation, they will not have so much free rein to squeeze profits here and there, right? So Ant Group valuation came down. In fact, their private rounds for fundraising has brought down the valuation, and they are no longer the number one in terms of the most valuable unicorns in the world. So definitely Alibaba on many fronts, because of competition in e-commerce, because growth rate has slowed, the valuation indeed has come down, right? So if you have bought at a high, I can't remember, just before Ant Group list was what, 270, 310.
The highest was
Yeah,
310.
if you bought at 310, then I think it is going to be very long time to see that 310. I don't know, maybe 10 years, right? Ballpark figure. But for Alibaba to rebound to 200 plus, I don't think it's a problem. But to 300, I think it's a stretch. Right? So it also depends on where you buy. If you felt that you are buying so much higher, you want the average down, I think it's okay, right? If you still have the confidence and you feel that the exposure is okay for you, right? Because for myself, I have a limit, 10% maximum for any stock, okay? So I do practice a bit of diversification, right? So it depends on your rule as well. Then for those who have not invested in Alibaba, you want to go in, I do think that, you have got in lower than a lot of Alibaba shareholders. It is a good price. But ultimately, you must believe in it, because otherwise, it go below 100, what are you going to do? Okay, so that is my short advice.
Okay, borrowed conviction don't last. Please build your own conviction. So
Agreed.
once again, I want to thank Alvin again, and I will definitely leave a link in the description box. Feel free to subscribe to them and check out their personal finance or finance related videos. So with that, I'll see you in the next video. More importantly, I'll see you on the moon. Goodbye.
Bye.